Sources tell CNBC-TV18 that GST Council is likely to consider replacing the compensation cess with two other cess. How is this going to be impacting, in terms of the tax formation? What will it be in terms of cess that we're seeing coming in? MS Mani, partner GST Deloitte India, joining in with us, as well as Mr. Bipin Sapra, tax partner at EY, to talk to us about this. Mr. Mani, as well as Mr. Sapra, good morning. Thank you so much for joining in with us. Now, this is what we're picking up from sources today, that, they are looking to replace this compensation cess with health cess as well as clean energy cess. Mr. Mani, I just want to start by understanding how will this process work. So health cess as well as clean energy cess, how will both these be implemented then? Right now, compensation cess is one, right? It's for all the products that are there. Now, health, will it be separate? Energy, clean energy, will that be separate? How will this be working?
So, before I answer that question, I'll just step back a minute on the subject of cess itself. We have to bear in mind that when the GST law was being drafted in 2015-16, with a lot of suggestions which came from businesses also, the GST replaced a bunch of taxes and a bunch of cesses. And at that point of time, it was agreed that the GST would function as one tax. It would not have cesses and surcharges attached to it. However, at that point of time, the group of ministers felt that in order to defray the costs relating to compensating the states for the collections under the VAT law in the past, there needed to be a mechanism to compensate them. And that is why for a period of 5 years, strictly for 5 years in the initial part of GST, 2017 to 2022, the cess was introduced and agreed. Subsequently, because of the pandemic, when collections went down due to slowdown in industrial activity, the government took a loan from the Reserve Bank in order to compensate the states, and to defray that loan and to pay back that, the cess was extended to 31/3/26. Now, in any conversation that happens on cess, we have to keep a fact point in mind that having a cess in the GST law is not in line with the architecture of GST that was agreed by all the stakeholders, including stakeholders from business. Because the moment we have a cess in the GST law, and what you are now saying is that there are likely to be two cesses in the GST law, we are tinkering with the architecture of something which was intended to simplify indirect taxes. And there has been some amount of simplification that has happened. More simplification needs to be done by rationalizing the rates. We are at that stage now. At this stage, if we extend the cesses with two more cesses, it is going to complicate things. To come specifically to the question that you asked, the compensation cess that applies today does not apply to all the products that are taxed under GST. It applies to certain categories of products only, which can be put in two buckets. It applies to large number of automobiles. It applies to a large number of tobacco and related products. So what could potentially happen when the compensation cess period of 31/3/26 ends could be that in respect of tobacco products, there is a health cess. And in respect of automobile products, there is a clean energy cess. But the moment we accept both these propositions, there are more questions than answers. For instance, how will the health cess be used? Is it going to educate people on the ill effects of tobacco? Is it going to be in some ways linked to the cancer universities and cancer research? We have not heard anything on that. Similarly, very importantly, when we come to clean energy cess, is it a cess that is not going to be applied on hybrid vehicles? Is it a cess that is going to be applied on all vehicles, irrespective of the fuel used and irrespective of the length of the car and the usage of any other material? So that is what has to be answered when we think of cess. Ideally, what businesses would expect is we should not be substituting one cess with another cess just in order to defray the revenue considerations.
Correct. Gentlemen, good morning. Thank you for joining in. Mr. Sapra, same question to you. Do you agree with what Mr. Mani says, that this introduction or a potential introduction of two cesses instead of one complicates the process? And now that GST collections have started to stabilize, do you see the need to do something like this?
So I agree with Mani fully in terms of that replacing one cess with other doesn't make sense. And I'll also step back a little. What you have to realize is that compensation cess is being levied on articles on which 28% GST is being levied, except maybe in cases like coal, where it was always a clean energy cess. It was being levied on 400 metric tons, 400 per metric ton, to really offset something like a indirect carbon tax. But the remaining everything else has been a revenue which the compensation cess has been distributing to the states depending upon their needs till a couple of years back. And since then, whatever was distributed and has to be paid back to the RBI, the loan which the central government was taken, that was the purpose why compensation cess has continued and will continue till March 26. Now, the purpose of creation of a GoM is to see that these are considered as sin goods, may or may not be sin goods, but on which 28% plus compensation cess has been levied. If a GoM has been mandated to look at what to do with the rates, because somewhere in the minds of the government, they do not want to reduce the rates which they consider as sin goods. They would want to keep this revenue for the purpose of rationalizing of rates, streamlining of GST structure, and bring this in. What you have to realize is roughly around 8% of the compensation cess is almost 7 to 8%, somewhere around 125,000 CR. And that's a lot of revenue to be brought into the GST system, which can be used for rationalizing rates, or maybe reducing 12% rates to 5%, or whatever, or maybe 28% to 18%. Things like that, which can be attempted once this revenue comes into the fore. And a GoM of center and states has been mandated to do this, increases our hope that, or increasing our thought that there might be GST rates which might be getting tinkered, and these cesses may not get created. So replacing cess with cess doesn't make sense. So coming back to your question, that will put revenue in the hands of which things which may be used for a certain purpose. But is that what the GST revenue is supposed to be done, or really bring down the other rates, needs to be seen.
Absolutely. Mr. Mani, you were highlighting, right? The purpose of the cess was actually to compensate state for the revenue losses, is what we've highlighted. That was the main purpose. Now, do you think the structure also possibly could change in terms of the breakup for state government as well as in terms of the central government? Is that a possibility of a change?
Look, I would just reiterate that the compensation cess, when it was brought in, was a temporary measure. And all businesses that were impacted by the cess were told that, please bear with us because we have to compensate states. Give us 5 years and we'll find out a mechanism. Now, 5 years is over. Now we are on the cusp of the 8th year of GST. And when this cess ends, it will be in the 9th year of GST. So by making a cess a permanent feature of the GST, we are altering the entire structure of GST. And one of the things that the government could look at, if there are revenue considerations that they need to keep in mind, is to see whether they need to marginally increase some of the GST rates. Because the law in GST permits the GST rates to go up to 40%, which is 20 plus 20. So there is a provision enabled in the law by which the GST rate can go up to 40%. Should they invoke that and therefore increase a 28 marginally to maybe a 30 or 32? Or do they want to have a cess? Because a cess as it stands today is again a complicated piece of legislation. In respect of cars, for instance, the rate of the cess depends on the fuel used by the car. It depends on the length of the car. It depends on the horsepower of the car. Now, that's not a kind of structure that we have when we talk of ease of doing business in India, when we say that we need to make the tax law simple so that everybody can understand. So if they need to look at it from a revenue perspective, they should also be looking at, do we have a 2% increase for cars? It goes up from 28 to 30 for all cars. Leave it over there. But then, as I said before, industry needs to be taken into confidence. The auto sector, the tobacco sector are two key constituents of GST collections. There is a large amount of collection that they gave month on month, which is why we are seeing record revenue figures. So these two sectors need to be first taken into confidence, their suggestions obtained in terms of what is the best way for the automobile companies and for the customers. And then possibly a way out needs to be found out in terms of how do we proceed now.
All right, gentlemen, we're running out of time, but it's a long-awaited discussion and a long discussion at that. Thank you so much for sparing time and joining us today. We'll see what the final outcome of this eventually turns out to be from the GST Council. There's some reports there and CNBC-TV18 Newsbreak as well